A non-borrowing spouse surprise, the truth about the rights and responsibilities of non-borrowing spouses. Welcome to this week's edition of the Industry Leader Update by Reverse Focus. HUD recently released new principal limit factor or PLF tables which now account for younger non-borrowing spouses under the age of 62. The Home Equity Conversion Mortgage Program, or HECM program, still only allows borrowers to be 62 or older, but now adjusts proceeds based on the age of the younger non-borrowing spouse. In essence, it gives the non-borrowing spouse the right to remain in the home indefinitely during what HUD calls a deferral period, provided that the requirements of the loan are met. Now that said, there are a few key points we must now fully comprehend of the benefits and risks of this policy change. First, non-borrowing spouses are on a very short leash. Within 90 days of the primary borrower passing, the surviving spouse must transfer the property into their name to establish legal ownership. If this deadline is not met, the loan will be called due and payable. Second, the non-borrowing spouse must meet the ongoing obligations of the HECM loan, such as maintaining the property and keeping homeowners insurance and property taxes and also homeowner association dues current and paid. Third, and perhaps the most important, the HECM loan is not assumable. Now what this means is that the non-borrowing spouse may have the right to remain in the property, but they do no longer have access to the remaining line of credit or even previous tenure payments which were being made. Now this could be very highly problematic for households which do depend upon the cash flow from monthly tenure or even periodic line of credit withdrawals. It is unclear what the responsibilities will be for lenders who become aware of the impending death of the primary borrower. Now, one could argue that they should advise them to withdraw all available funds from the line of credit or even to modify the payment plan from tenure to a line of credit to secure funds before they are frozen. Fourth, your borrowers with non-borrowing spouses will need to complete an annual certification. Yes, every year. Here's a screenshot from HUD's mortgagee letter. Upon the death of the surviving borrower, the non-borrowing spouse must complete the certification form within 30 days of them receiving notice of the borrower's death. Fifth, divorce? Well, it'll become even more costly. In the event the surviving borrower divorces the non-borrowing spouse, the younger spouse is no longer eligible for the deferral period and thus would face foreclosure or selling the home. It may be a moot point as most divorced couples no longer live together. This should make for some very interesting marital settlements in family court. Also, if surviving borrower remains or remarries, the new spouse is not eligible for the deferral period since they were not married to the borrower at the time that the loan was taken. Sixth, HECM counseling will cover the nuances for non-borrowing spouses, informing them of their rights and also responsibilities. And lastly, seventh, interest will continue to accrue, as does ongoing MIP charges. Now, what are your thoughts on these new protections and requirements for non-borrowing spouses? And also, what implications do you anticipate? Leave your comments in the comment section below and have a great week.